SOFI stock looks like it is ready to break out over the next couple of days, if not the next couple of weeks. The technicals are looking very good. We have an inverse head and shoulders pattern that is formed, which is very, very bullish. You also have an executive order from President Joe Biden that does go into effect on Friday on June 3rd. So I think that's going to cause a lot of bullish enthusiasm this week as well as next week. Now, if you guys don't know what this executive order is, make sure that you stay tuned because it has a lot to do with stocks with very high short interest and essentially hedge funds not able to use Chinese securities as collateral. We have seen this come and go twice over the past year, and both times it has were basically the reasons why stocks with a lot of short interest rally very hard, like GameStop, like AMC, like BBBY, like all of your meme stocks. SoFi is obviously not in that category. We are long-term investors in SoFi stock, but if you can take advantage of this information and make some money, best of luck to you. Best of luck to you. And that's essentially my job, to provide you guys an unbiased opinion and provide you guys the information. Now, on top of both of those things, you also have just very bullish things that have happened for SoFi as of recently. You have partnerships. You have 13F filings, which hedge funds are loading up money managers. We'll just call them money managers on SoFi stock. You also have insiders that are buying the dip like nobody's business. And you just seen the markets finally start to see a little bit more optimism around buying long duration stocks. A long duration stock would be, as simply put, you're buying SoFi now in hopes that it 10x's over the next 5 to 10 years. That's a long duration outlook. That's a long duration growth stock. So we got a lot to talk about here in this video. The work is cut out for us. Oh, don't let me forget, we're also going to talk about the economic data that is going to be coming out this upcoming week, because even though it is a short week, Monday, markets are not open for Memorial Day weekend, you do have some economic data that comes out, and that could be very important for the markets as well. So we are going to get into it. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to support the channel as well, link down below in the description as well as in the pinned comment for the Patreon. You can get access to all of my trades in real time and just come chat. It's a great place to be. Would love to have you over there. So nonetheless, let's get into it. Oh, also your free stocks down below in the description. Webull, Moomoo, and Public. Take advantage of that while it does last. So let's talk about it, guys. So what exactly is this executive order? Well, we're going to look at this and compare this to actually AMC, but it's executive order 14032. And this actually went into effect January 27th for AMC, and we peaked out January 28th, 29th, so the next day later, as well as it went into effect on May 27th, 2021, and we peaked out just a couple days later. But it wasn't just AMC. Think back, it was all retail stocks. Anything with a high amount of short interest was pretty much rallying. Well, Biden actually kicked the can down the road on June 2nd, the day that AMC as well as other meme stocks peaked out, and they started to fall. Well, he kicked it down the can for 365 days. So coming on June 3rd, the executive order will go back into effect. Now, if you guys are unaware of what the executive order is, it's essentially saying, hey, hedge funds can no longer use Chinese securities as collateral. So that puts a lot more pressure on cost to borrow rates. That's why you have seen cost to borrow rates in SoFi as well as other stocks going through the roof as of recently. And it also puts a lot of pressure on the shorts that have short positions, aka why a lot of stocks with high short interest go crazy after this executive order does go into effect. Now, the executive order does not usually stay in effect for too long, but I think given where the geopolitical situation is, the tensions with the US and China, with the regulatory concerns we have seen over the past year, with the economic concerns we have seen in China since June, I think it makes more sense than not that this might last a little bit longer than just the typical 2 to 5 days we have seen twice over the last year. So we'll see. It's not a guarantee, but it does tend to move stocks with a lot of short interest. That is the main point that you need to know. That goes into effect on June 3rd. That is going to be on Friday. So I think this upcoming week could be very, very bullish, as well as the week after that. So that's the first piece. Now let's talk about the technicals briefly, because we do have an inverse head and shoulders pattern that is formed. So essentially what this is here is the shoulder, here's the inverse head, here is the shoulder, and now you're starting to essentially head on that rally. Now, if you guys don't know what an inverse head and shoulders pattern is and what Investopedia says, it says, what is inverse head and shoulders? An inverse head and shoulders, also called a head and shoulders bottom, is similar to the standard head and shoulders pattern, but inverted, with the head and shoulders top used to predict reversals and downtrends. This pattern is identified when the price action of a security meets the following characteristics. The price falls to a trough and then rises. The price falls below the former trough, then rises again. Finally, the price falls again, but not as far as the second trough. Once the final trough is made, the price heads upward towards the resistance found near the top of the previous troughs. And you guys can see that's essentially what we're looking at right now, but this is a longer time frame. For an example, what a head and shoulders pattern is, which might trip you guys out just a little bit, but what a long-term head and shoulders pattern actually looks like is essentially this, right? You know, shoulder, head, shoulder, just small neck, right? And then straight down. So this was a bearish sign, especially when you got the triple top head and shoulders and then started to fall. Now you're seeing the opposite, but just on a smaller time frame. So that is that. It does say the key takeaways: in inverse head and shoulders is similar to the standard head and shoulders pattern, but inverted with the head. Okay, we read that. In inverse head and shoulders pattern, upon completion, signals a bull market. Investors typically enter into a long position when the price rises above the resistance of the neckline, which we are pretty much at that right now. We're pretty much at that neckline right now. So as the price, does start to go up, especially as it breaks out above the 50-day moving average. This is the neckline right here, this blue line. I do think you're going to see a lot more bullish enthusiasm for SOFI stock over the next, coming days and coming weeks. So mix those two factors together, you can make a pretty strong case in and of itself for a rally or a breakout for SOFI stock here in the near-term future. 50-day moving average, that's our long-term resistance level for quite a long amount of time. You've seen a lot of resistance around that level. So we'll see if we can actually break out above it. It's one of those things where if we do, it's going to be very great. If we don't, then we're just going to head back down. It's been so hard to break out above it. That's the daunting part, that the 50-day moving average is right here, right now. Volume has been very low, though, in the 30 million range after it was previously in the 50 or 60 million share range. So if you do see volume head in, even back to where we were just in, May 20th, right? 56 million shares traded hands, then you could see that breakout above the 50-day moving average. So we'll see if the volume does head back into the stock. As far as the RSI is concerned, that is at 55.37. So getting a little bit on the overbought side, but neutral is 50. So it's kind of still on neutral. The MACD has been quite bullish for a decent amount of time. So it looks pretty good in that regard. Just volume has dropped off just a little bit, but the fact that we have been going up on low volume is very, very good. SoFi stock was up 5.74% on Friday with 38 million shares that traded hands. Very, very small. The 2 days prior than that, you rallied about 6% total off of, again, very, very low volume, about 35 million shares trading hands both those 2 days. And then, like I said, 38 million shares on Friday. So the fact that we have been rallying on low volume is good, because you could expect to rally really hard when volume does actually come into the stock. So that is that as far as the technicals are concerned. Obviously looking very, very bullish. Now, as far as the Ortex data, you're looking at about 18.43% short interest of free float, about 134.13 million shares that are sold short. And like I said, the cost to borrow rates have been going up as this executive order has gotten closer to actually getting implemented. You can see cost to borrow minimum at about 3.54%, cost to borrow average at 5.45%, cost to borrow max at about 15%. And you are seeing a lot of shorting activity still with SoFi stocks. So that's why it's so impressive as well that the stock is actually able to move up when there's a lot of brand new short positions that are, coming into the stock as well. Now, the free float out on loan is sitting at 30.16% with about 220 million shares that are currently out on loan. So what does that mean if there's only 18.43% of the float that is actually sold short, but 30% is actually lent out or borrowed? Well, it means potentially 12% of the float could be sold short against us at any moment, or it could be returned back, and that would be very, very bullish. So you do have that looming over our head for a breakout. That's why I don't think you'll see a sustained rally for like months. This is definitely not going to be the overall bottom for 2022, in my personal opinion, when the economic data really starts to look bad and when the Fed does ultimately have to cut rates again. That's when you could potentially see a big market crash, and things could get pretty rough when the markets realize the Fed has pushed us into a very deep Fed-induced recession, as well as oil prices staying above $100 a barrel for an extended period of time. That's when you want to do the most shopping, in my personal opinion. But even right now, $7 per share, it's a steal of a deal. And you guys already know this because look, insiders have been doing nothing but buying the stock. Anthony Noto, dude, he is the man. He just buys. This guy just buys like almost every day. He's just like, yeah, we'll throw another 100 grand on it. I'll throw 250 grand on it. I'll throw 200 grand on it. Just back to back. And it's really making SoFi stock look really good right now. There's a lot of reasons. I've said this and I'll say it again. There's a lot of reasons why people sell stock. It's insiders, right? CEOs. There's only one reason why people buy stock, and that is because they think it's undervalued and it's going to go higher in the future. So all of that looking very good, and that's essentially why I think a breakout is coming for SoFi. You really don't have anything bad to say about SoFi besides people saying, and the government, right, talking about just doing away with student loans, just forgiving all the debt, which is impossible for the government to do because it's their largest asset. The government would be in a very bad situation if they did that. That's kind of why I thought it was kind of messed up that during the presidential campaign, Biden was basically saying he was going to forgive student loan debt. And if you're in the financial world, you already knew that was impossible anyways. But not to get political here, it's impossible to get rid of that debt. So I wouldn't worry about that all too much. Now, on Monday, markets are closed, but you do have Fed Waller that speaks. That could move the markets, coming Tuesday, and that will affect, obviously, pre-market as well as futures trading on Monday, because you will have futures on Monday just like you normally would for a Sunday, right? So you do have that. Some Canada GDP numbers that are coming out. S&P Case-Shiller home price year over year that comes out at 9 a.m. You have the Chicago PMI house price index, Dallas Fed manufacturing index, all coming out at about 9:30 to 10:30 in the morning. That is on Tuesday. Don't expect those to be really big market moving events, but these will move markets substantially, in my personal opinion. You do have S&P Global Manufacturing PMI at 9:45 a.m. on Wednesday. And then you do have Bank of Canada interest rate decision at 10 a.m., ISM Manufacturing PMI for May at 10 a.m., as well as JOLTS job openings at 10 a.m. as well. And that is going to be very important. Dallas Fed Services Index, Dallas Fed Services Revenue, some ECB speakers, Fed Williams that speaks at 11:30 as well on Wednesday. On Thursday, ADP employment change for May. That's going to be the most important thing, but you do have non-farm productivity, unit labor costs, initial jobless claims, continuing jobless claims, factory orders, a lot of crude and oil data. You do have more Fed speakers like Fed Logan that speaks, Fed Mester that speaks as well at about 12 p.m. as well as 1 p.m. And then on Friday, you do have unemployment rate, non-farm payrolls, ISM non-manufacturing PMI, and Fed Brainerd that speaks as well. So it looks like Wednesday, Thursday, Friday, those are going to be your big days for economic data. And that's where the markets could, rally substantially or fall back into the toilet. So that is basically it. That's basically what you guys need to know for this potential breakout with SoFi stock. as well as the economic data, things that could move the market. So that is going to be all for this video. Hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Thank you guys for tuning in. Yeah, you guys enjoy your Memorial Day weekend. Take a little bit of time for family, go to the beach, do something fun, baby. It's coming. It's coming in due time. Our portfolios will come back. This is your golden opportunity to build massive amounts of wealth in a relatively short amount of time if you're actively buying the dip, and hopefully buying the dip a little bit more than you have been in the past right now. So thank you guys for watching. I will see you in the next one.